What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Well, it does appear that our little relief rally has now come to an end, and it'll soon be time to start buying again. The market was on edge all week, and really the questions were around, would the CPI come in line with expectations, or would it be sizzling hot? Or would it cool down? Well, we don't have to wonder anymore, and markets did not take the news kindly, as you can tell by this headline here. I mean, the last time the CPI or Consumer Price Index was this high, I wasn't even alive. So it's no surprise that market reversed and ran in the opposite direction at the sight of the CPI, and I think this meme here nails it. Also this week, Neo released its earnings results on Thursday pre-market. Simply looking at the EPS loss of 13 cents per share and the fact that it came in line with expectation does not quite tell the full story. So in today's video, I'll take you through the highlights from the call. They dropped a few golden nuggets, including confirmation on the move towards the US market I covered in my last Neo video. We'll see where the analyst consensus now lands and wrap up with what to look out for next week, as well as why the CPI print is actually a big deal. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to your channel and help it grow if you appreciate the content. All right, let's get into it. Okay, so let's start by grounding ourselves a bit here. Neo current all-time low came in on May 12th at $11.67. Despite the sell-off that capped the end of this week, this still represents a nearly 40% increase this past month alone. My point here is that buying into the fear has already generated some pretty significant returns on those shares for anyone who was bold enough and understood the business fundamentals. With that in mind, here's where Neo struggled a bit in Q1. Both gross margin and vehicle margin took a hit, not only on a quarter-over-quarter basis, but also on a year-over-year basis. This table here is a bit easier to read than all the text earlier, but you can see how at 18.1% for vehicle margins and 14.6% for gross margin, that was a fairly significant drop respectively, right? Now, the reasons Neo gave for the lower performance this quarter are higher battery costs due to raw material price increases, as well as lower average selling price due to the shift in its product mix. And you can clearly see that the ES6, which is the lowest trim in Neo's lineup, made up just over half of the sales for the quarter. You'll also recall that while most EV makers and automakers in general were hiking their prices, Neo took the high road, right? And really didn't want to pass on that cost for most of the quarter. Now, in the end, they ended up reversing course with a slight increase going into effect on May 10th. Now, of course, the only way you can offset shrinking margins and still meet overall consensus for the EPS is with record revenue growth. And Neo did just that with a total revenue of $1.56 billion, up 24.2% year over year, and a 0.1 increase on a quarter-over-quarter basis, beating all estimates. As challenging as Q1 was, Neo has definitely pulled through and has been quite busy. Many of the highlights I covered in my last video here is what Neo actually covered on their call as well. Of course, the main two things I was looking for was the forward guidance for Q2, as this would be a good indicator for the stock performance moving forward. Neo guided to 23,000 all the way up to 25,000 for deliveries, representing an increase of about 5 to 14%. And when you consider that COVID lockdowns in China were more significant in Q2 than they were in Q1, this is actually really nice guidance and supports my point that June should be a very strong catch-up month for Neo with nearly 12,000 deliveries. That's, of course, if they hit the upper end of the guidance. They also expect revenue to be ranging from $1.5 billion to $1.6 billion, representing an increase of approximately 10.6% all the way up to 19.4% on a year-over-year basis. Then again, as good as those projections are, Q3 and beyond is really where it gets good. And here's what I mean. They gave an update on the ET5, which is their mid-size sedan. Deliveries are expected to start in September. That's not very far. The ES7, which will be their new flagship SUV, was delayed a few times if you recall, but now is confirmed to be launching in June, with deliveries starting in August this year. These two new models will be coming out of their new manufacturing plant at NEO Park in Hefei, and this of course means more capacity and continued revenue growth, which is exactly what we want to see. But without a doubt, the two biggest golden nuggets NEO dropped during the call were, one, the confirmation of a mass market model with in-house created battery technology. The price point for that model will be anywhere between $30,000 to $45,000. And number two, I shared with you a couple of weeks ago that NEO was evaluating a plant in the US. Well, not only did they reiterate that they're definitely entering the US, their CFO stated that they are starting a comprehensive study on the US market and have a dedicated team in charge of the plans for the market. And he wrapped up his statement with, "We're talking to the US." Now, this is me jumping ahead and piecing it all together, but this further reinforces that 2024, in my mind, without a doubt, is the year NEO enters the US market. Ultimately, at the end of the day, NEO has over $8 billion on their balance sheet with growing revenue. Supply chain conditions will improve heading into the second half of the year. EV adoption is accelerating in China, which is the biggest automotive market in the world. And if that wasn't enough, they have a compelling and healthy product lineup pipeline, right? So in my opinion, you just can't go wrong with NEO at this point in time. And I personally will be buying on weakness every chance I get. Now, of course, we all know that I'm biased in favor of NEO, but clearly, I'm not the only one who shares this opinion based on the analyst views and price targets. The consensus average price target has come down slightly to $39.73. This still implies, however, an upside of 119%, which is massive. That's basically over double your investment at today's price. No revisions on the high end with the forecast still at $87, and the low end remains identical at $26. You can see the rating here, and it really doesn't get any clearer than this. From a recommendation standpoint, unanimously a strong buy. So really, the last thing to touch on, zooming back out to the macro view, the CPI number coming in at 8.6% means that inflation has not peaked as many were hoping for. The collective thought for most market participants was that if CPI had plateaued or shown signs of decelerating, then the Fed may be more inclined to only hike by 0.50 percentage point in June and July as planned, but then either pause in September or at the very least only do a 0.25 percentage point increase then. This then leads us to what to look out for next week. The June rate hike is going to effect on Wednesday, with Fed Chairman Jay Powell also briefing the press on the same day. But here's what you now need to understand. The market fear now is really, does the Fed increase faster and sooner, and or do they for sure do another 0.50 percentage point in September? All of that, of course, is in an effort to figure out, does that ultimately lead us into a recession? The only thing you really need to know is that regardless of the outcome of these discussions, the market is more than likely going to trend lower between now and Wednesday, then rebound and push higher. The way I see it, hopefully, you kept some cash available to go bargain hunting on NEO and other growth names. But on that note, this is where I will leave it for today. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. As a reminder, I post every Sunday. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.